when I first heard you talking about this, it reminded me, so, go back 2005, 2006, the oil, we first started covering oil, we had, predictions of $150 oil because basically, the world was running out of oil. The peak oil theory had the U.S. was just struggling.
Yep.
It actually, I think it ended up peaking around $140 something a barrel at that time. But the reason was the advent of fracking.
Yeah.
So hydraulic fracturing, really came mainstream in 2007, 2008.
Yep.
And it was kind of if not for that, who knows what oil would be at now.
It would be crazy.
And the U.S. was fortunate to
we have lots of that tight oil.
Exactly. So it was a technological advancement that enabled just a huge oil rush in the U.S. and now they're doing it globally.
Well, and it made the process more efficient too. So that was where things sort of backfired on OPEC.
Right.
Because it was the Saudi-led OPEC, and they were like, we're going to crush these Americans. We're going to drop prices as low as possible. And then it turns out that the Saudis and most of the OPEC countries, the majority of their GDP comes from oil.
Right.
So when oil prices, so basically they may have a very low extraction price, right? It may cost them $15 or $20 a barrel to get the oil out of the ground. But then they've got about $60 to $80 worth of social programs tied to each one of those barrels of oil that they've got to support. So that makes their break-even price closer to 100. And
that's to keep the populace from
frackers, their break-even price was the cost of extracting the oil. So
right.
If oil stayed above $25, they were fine.
Yeah, they didn't have to keep Saudi Arabia has to keep a populace in line from revolting against
They got to keep the people happy.
Yeah. So that was basically a huge change. Not a lot of people saw that coming. We were in early on it, and
the Bakken shale.
Real early,
and
just absolutely crushed it in hydraulic fracturing. Oil sands technology, but mainly the Bakken. And the natural gas plays.
Yep.
So, is it fair to say this is very similar to that sort of things? Because it's all you hear is, we need all this lithium to run these things, blah, 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 blah. So it seems like now's the time to get in on, basically this is new this is fracking for lithium, I guess.
It sort of is. And honestly, I think it could be bigger than that because the one extra thing that you have tied onto this is that not only does it make lithium mining more efficient and more profitable, but it also makes it more environmentally friendly. Right, so it's more economically viable and it's more environmentally friendly.
Yeah.
Fracking, there's debate on that,
right?
Whether or not it's bad for the environment or whatever. But there's not much debate on whether or not burning fossil fuels is bad for the environment. We can see the smoke come up when you inhale it, you cough. It can't be that good. So. But this, it's better for the environment. It's better for everybody. It's better for the people in the surrounding area. You don't have to use up their land to make those evaporation ponds. You don't have to steal their water, to fill the evaporation ponds with. You don't have to worry about runoff because it's all done inside of a factory, which can be built on site, and does not take up hundreds of acres. It just makes everything better for all of the different stakeholders. And I know that people are probably tired of hearing about stakeholder capitalism and stuff like that, but you do you need to look out for everybody, right? I always use the example of BJ's Wholesale Club and Costco Wholesale Club, right? They're both publicly traded stocks, so you can check out their performance and you can check me on this, right? But BJ's is kind of more like a Walmart. Right, where they hammer their suppliers and they try and get the lowest prices they possibly can. They have pretty high employee turnover. Their revenue per employee is not that impressive. But then you go to Costco, and Costco works with its suppliers and it works with the communities around it, and it has incredible employee retention. And I think its revenue per employee is something like $17,000 per employee, which is super impressive when you think about how how many employees they have. But a story that I love to tell about Costco is Costco, they negotiate hard too with their suppliers, but they negotiated this supplier down to like a ridiculously low price. And they went back, and they were like celebrating, but they were also calculating, and they were like, wait a minute, this guy's not making a profit. And so they called the guy the next day and they were like, look, we need to renegotiate the price. And he's like, I can't go down any lower. I will go out of business. And they were like, we know. We want to pay you more because we want a long-term relationship with you. We don't want to put you out of business, just because you want a big customer. So we're going to pay you a little bit more money so that you can make a profit, so that you can grow your business and you can be a long-term partner of Costco.
Yeah,
and
that's long-term thinking.
The difference between their stock prices, Costco has outperformed BJ's by leaps and bounds.
I personally am a Costco member. I like it a lot. I got the membership card.
That Kirkland brand, man, that's some good stuff.
But I definitely like it a lot better than BJ's for sure. And they got both in my town. So
okay,
all right. Well, I mean, it sounds like lithium. The fracking for lithium, as I was called,
I'm excited about it.
Yeah, is a big. I've been hearing more about it. Like I said, now it seems to be like kind of the turning point when it's on 60 Minutes. I remember when they were doing that on like the oil the Bakken and the fracking stuff. You want to get in before the mainstream sort of like picks up on it.
Yep.
And
and that's the cool thing is right now, I was just talking a little bit earlier about somebody was asking about like who's the biggest, lithium miner in the country. And I was like, oh, it's kind of funny. That's actually also the biggest lithium miner in the world, this company Albemarle. But one thing Albemarle is not really working on in the field yet is this new type of extraction. And it's because big companies like that, they don't like to take risks on new technologies. They want to see other companies, implement it. They want to see how successful they are. And then, hey, we've got billions of dollars. We'll just buy this other company and use that technology. So you're still at a point where these big players haven't really gotten in on the game yet. And it's all, smaller, mid-sized companies they've got less to lose. So they're like, hey, maybe this will let us catch up to those guys. And, that's the really exciting part.
Right. So the companies you're looking at are the smaller players that have developed this technology and are potentially, buyout targets for these bigger guys.
Yeah, definitely. And what's really cool about the lithium industry, and it's also pretty cool about, just about any mining or extraction, natural resource extraction industry, is that they say the best place to find a good gold mine is right next to a good gold mine. Because like resources don't respect boundaries that are set by man, right? So, if your neighbor has a bunch of gold on his property, chances are you got a bunch of gold on yours. If there's oil right here, there's probably going to be oil right next to it. And if there's like a bunch of billion-dollar lithium companies right here and your location's right there, dude, you're going to be a billion-dollar lithium company one day. And so, that's what's really neat about it is you can find these little companies on a map and be like, hey, man, they're right next to, POSCO, this, like $5 billion South Korean giant. They're right next to like Livent that just got acquired by, Alchem in like a multi-billion-dollar transaction. Hey, like if these guys have good assets right there, then a couple miles south, they're probably still good assets. So that's what's really neat about this is you can go and you can, find these small companies and it's not quite like those lottery tickets we were talking about earlier. The risk is sort of mitigated by the fact that they are already right next to, a peer that has very deep pockets and that's already been very successful in that area. So, either they're going to be very successful in that area or the peer with the deep pockets is going to be like, hey, thanks for developing that. Let me buy it from you.
Gotcha. And you're
and these companies get bought at like 50, 60, 70% premiums, probably higher these days.
That's nuts.